It's tax time again. In this video, I will share the 5 tax questions and answers you need to know if you traded cryptocurrency in 2018 or earlier. My name is Andrew Gordon. I'm an attorney and CPA, and my firm has been helping clients with complex crypto tax reporting since 2013. There is one thing that is certain about cryptocurrency and tax. It is complex and a pain to deal with. But fear not, we're going to break it down in this video and in less than 5 minutes. Here we go. The first question, I haven't sold any of my coins this year. Do I still have to pay taxes? If you actually held, meaning you did not sell, you didn't exchange, you didn't purchase with the crypto that you have, then you don't have any gains to report, you don't have any transactions to report, and there's no tax to pay. So if you received crypto, for example, as a gift, you left it alone, you didn't trade, you didn't do anything with it, there's no gain, no tax, nothing to report. Number 2, if you did trade crypto, how is it taxed? The IRS has said that Bitcoin and other cryptos are taxed as property, not currency. This means that you pay a tax when you sell it at a gain or the difference between your purchase price and the sales price. To answer the most common question, yes, trading from one crypto to another is taxable. For example, going from Bitcoin to Ethereum. If you bought one Bitcoin with Ethereum, for example, it's as if you sold the first Bitcoin for cash and then used the cash to buy the second. You have to calculate the gain or loss on the sale of the first crypto and report it on your tax return. There is no like-kind exchange treatment for crypto. So number 3, what tax forms do I need to use to report my crypto gains? Your cryptocurrency trading in general is reported on your U.S. income tax return on Schedule D, with your specific trades on Form 8949. And yes, you do need to report each trade on 8949. If you can't fit it all on the form, you can use a statement. If your holding period is more than 1 year, it's a long-term gain or a long-term loss. If it's less than a year, then it's short-term gain or loss. This is important because long-term gains are treated more favorably with a tax rate at 15 or 20%, whereas short-term is your ordinary tax rate. It's important to figure out which one so you pay the appropriate amount of tax. Number 4, if I lost money in 2018, can I take a deduction? Many traders had significant losses from their cryptocurrency trades in 2018. It was quite a bad year. If you have an overall loss, you can use your crypto losses to offset gains from other property, such as sales of stocks or securities. If there are no gains to offset, you can deduct up to $3,000 a year against ordinary income. Any remaining losses can be carried forward, but not back to future years. So if you had $50,000 in losses this year, but only used $3,000, you will have $47,000 next year to use for any future gains. Final question, I lost my trading records or I can't pay my tax. What should I do? Even if you don't have your records or you don't have the money to pay, you still need to file taxes every year. A big mistake people make is thinking that it's better to wait not to file or not file at all. Instead, file before the deadline and you'll save on penalties. If the deadline passed, file as soon as you can. If you can't pay, in many cases the IRS will work with you to reach a payment plan. The IRS interest rate is presently only 5%. It's not that bad, but the penalties for not filing can be very severe. If you don't have all your cryptocurrency records, this is also not an excuse not to file or to not report your crypto. Hire an expert to report as best as possible. The IRS does not require perfection, but in many cases, you can rebuild your trading history and get pretty close. Don't just ignore the problem and wait for the IRS to contact you. If you have other crypto tax questions, or if you want a crypto tax attorney to prepare your tax return, reach out to us, www.cryptotaxhq.com.